Mehra here. So let's talk about, a theme from your books. Where is there money to be made in this market? Where do you think is still the myth that this sector is going to do well, but do you think fundamentally it's shaken off and it's not going to perform? Let's break it down for our viewers.
Okay, so my advice, Aisha, actually has not changed in the last few months. It's not as if after the market corrected, I started saying something different. So even I had retweeted my July tweet where I had said, get out of small and micro caps and very fashionable sectors and get into a large, steady portfolio. So that pretty much remained. Of course, now, there's been carnage on some stocks. I mean, this is not the latest data, but about 10 days ago, I had looked at the data. And at that time, I had seen that while the index fall didn't seem quite so substantial, we had this thing that the stocks, there were 65% stocks that were down 25 to 50%, and another 19-20% that were down 50% plus. So 85% of the stocks were actually down more than 25%, which was not really getting captured in the index data. So that's why the blood on the street in some fashion has been a lot worse than what appeared. When you just looked at the index, because the index movement is nothing out of line. If you go back 18, 19 years, every year the index corrects in double digit, barring I think 3 or 4 years. And one of those years was 2023. So in a sense, after 2 years, you had a double digit correction, which should not have caused so much anguish. But what people forget, again, this is data I've been pointing out for a very long time, that small cap movements are always very dramatic. If you look at 2008-9, the small cap index fell nearly 80%. And then if you remember, that index came back in 2016-17, but that was theoretical because that index churns 18-20% every year. So 8 years later, it has a completely different set of stocks. And there was another mad bull run in 17-18, and then that index again corrected 2/3. So last year, when I was telling people that, I was told you're being too conservative, and why do you say risk management first? And now the thing is there for everyone to see, because the problem in small caps is that risk management is not possible. When they fall, they just fall like a stone. You can't get out. You can't hedge because there is no liquid hedge on small caps. So, but a lot of the pain is behind us. But remember, in every bull run and then a correction or a fall, the next bull run, the same stocks don't go up. So I would still say that be in a steady portfolio. Below that, it is a very stock specific market. So, grit your teeth and take the losses, even if you are down, whatever, 30, 40, 50% on certain stocks or more. Because the stocks may not come back at all, and you don't need to make the money back in that same stock. I always say the market has zero interest in your purchase price. So if a stock or a strategy or let's say a thematic fund has not worked out, it might still be a good idea to book losses and get into a better portfolio.
If you like this video, then like, share and subscribe to ET Now.